All right, welcome everyone back to another weekly edition of Stock Market Mutterings for the week ending on 3/11. We're going to get in these charts. We're going to get all up in that business right there, try to make some sense out of this stuff, and try to dish you out some really good ideas. I mean, like I've been saying over the last couple of weeks, this market has mad range. We went from all of 2017 to tiny little moves, slow ranges, and then all of a sudden you get this mad dog thing ever since February. So we're going to talk about that. We're going to pick up where we left off, because it's like spy, you don't ever want to die. I mean, you think it's done, and then all of a sudden this thing comes rallying back. So let's just get serious and go back and look at last week where we left off. Now, the theme from then was trade wars, and people were a little bit giddish about that. Market takes a pretty hefty 3-day sell-off. We go into Friday. A bounce was somewhat expected. It was a pretty good bounce. So kind of where we left off with last week was, what are we going to do? We're going to build on this bounce. And the thing I was looking at was the 50 moving average. So if you take a look at the daily chart down here at the bottom, you got this red line right here. That's my 50 moving average SMA on the daily chart. For the longest time now, I shouldn't say the longest time, since like February. That's not the longest time, but it's intertwined with that 50 moving average. So if we go back to the pivot at the 200 moving average, which is this teal line down at the bottom where the current bottom is, it just kind of trades right on back up to that red line, that 50 moving average, slightly crests it, pulls back below, then just kind of breaks out above it. Now at this point it looked like it might want to work its way back to all-time highs. Then trade wars come out, or tariffs I should say, and then we sell off, we get down in underneath the 20 and then back up. And I thought we might see a little bit of fatigue around that 50 moving average again. It's been just kind of, intertwining it, like basket weaving through that. However, employment numbers, job numbers came out on Friday. It was really good. This damn thing didn't stop the whole day. It's like nobody in the world ever sold a share on Friday, it seemed like, because this thing just melted the entire day. 400 and some plus points on the Dow. You had 44 plus points on the futures. I mean, it's just nutty. But guys, look, we are at a very important pivot here, because if you look at where we closed on Friday, that's back to where this market was on February 27th. So that's where this whole tariff thing started. Now that's made a nice little double top. So the question that we've got to look at are two things. What are we going to do with this double top? And what about this 50 moving average that's been sort of like the magnet for this stock? So are we going to go higher from here, break through this double top? And of course, the next resistance is all-time highs. And will it get a whiff of all-time highs? Will it try to grind up to all-time highs? Or will it come back down into that 50 moving average and try to retest it? I have absolutely no idea what it's going to do, but one of those two things is probably going to play out early in the week. I would kind of lean towards a bounce. You're going to have some people that are looking at this late, and they're going to want to get in first thing on Monday morning. So that's probably what's going to happen. Also, you got to kind of take into consideration, I know a lot of New York was heavily under snow in that area, so that maybe there's some conspiracy theory there. Hell, I don't know. But let's watch that. It's a very pivotal spot sitting right here. It's either going to break through that and go a little bit higher, or we're going to go back down there and firm up somewhere around the 50 moving average. We shall move on now to stocks, because that's what I want to talk about. I'm going to give you a couple of long ideas, and I'm going to give you a couple of short ideas. The first stock I want to talk about here is Bison, the old Bison. Now, according to the way this pattern has worked out on this chart, it's done a 1 day on and a 1 day off. So you look at this, they had earnings here. This thing goes massively parabolic. It's like $12, $13 on the day. It was only a freaking $30 stock, right? Then the next day it kind of sells off, gaps down, and then the following day, it just rallies right on back. And if you look closely at this bottom chart, it just crested 48.60s, which was the resistance. Just kind of poked its head right above that. And then, of course, Friday, I guess everybody was busy buying Netflix, because they can't stop buying Netflix. They can't stop buying freaking Amazon. So they must have forgot about little baby Bison here. What I'm looking for is, if the market stays strong, or at least kind of like the same behaviors that we had, look for this thing. If it crests up here, look at this upper chart that I've got. If you get above 48.85s, 49 bucks, I think this thing's going to run to 50. I mean, it's a tall flag on the daily. It's got some range, but but you really got to watch this thing. I think if it gets up there, 50 is probably something that's going to sniff out, maybe even 51, 52. I mean, this thing does have $3 or $4 potential. So watch some Bison. Another one here, sticking in the China Grove. How about we do a little bit of YY? Now, this one's a different trade. This was one of those monster stocks throughout all of last year and pretty much the beginning of this year. I mean, this stock was a $80 stock, rolling to 140. I'm sure it was even lower than that if my chart went back further. But they had earnings that came out. It wasn't that good. At first, it looked like it was good because you go up here to the upper chart, it went vertical. But then after that, it was like, maybe there's not so good. And then it sells off. So you're sitting here at a really extended candle bear flag. If you look right here, you've had about 4 days worth of saving going on around the 118, the middle 118, say the middle 118 area there. Now, I don't typically like bear flag shorting when you're breaking through lows on there, at least the first go around, because for the last couple of years, the market has just played favorites to these. They just seem like when they get down there, everybody piles on and then they get smashed, because I think you take a look at Tesla today, and that's exactly what Tesla did here on Friday. You look at the daily chart and it broke that low down there. And then all it does is it turns around as soon as it does that and spikes and goes almost green on the day. So you got to kind of watch for that. I would look for the second re-gear move. I shouldn't say re-gear, for the retest of the lows, and then it breaks. But there's another trade here. You're either going to get two. It's either going to firm up down here and hold this level and bounce. And even if it's just a panic bounce and only lasts a day, it's still a $3 to $4 trade. I mean, you still got money in this thing. Or if it loses it, I mean, you got all the way down to this 108.50 before you have any kind of support. So I mean, this thing's got some range in it. Let's watch it. Let's watch it. Let's watch it and let it do what it wants to do. I also want to talk about OLED. This is something I put in this Mutterings like a couple weeks ago, and I said it's due for a bounce. I never got the bounce. Because, you know, this was a stock that was over 200 bucks, rolling down to 120. So, you know, this thing's been butchered since January. But this last couple days, what we noticed here in the trade room is take a look at these upper charts. It's gone parabolic in the morning, then it's kind of sold off. Then it's gone parabolic and sold off. And then Friday it goes para, and maybe the market held it up. So this thing has been trying to break out, and where it closed today is just slightly above the gap opening price from February 23rd, where this this deeper selling went to. If it can hold up through here, maybe it's not the first trade to look for on a Monday, but it should trade back up to this 200 moving average of 142, and maybe if things get frisky, 153 would, I mean, you got all the way to 153 before you fill the void on that gap. I mean, it's there. And maybe if you miss it, you can look for it as a short. I know I tried one of those. I think it was a few days ago. I shorted it, but I don't know. Just keep this thing up here. It's sitting down there. It's frisky. It's pointing at us. It's telling us, hey, look at me. I want some attention. I'm trying to get up there and make myself a hero again. So we'll keep an eye on that. Now, last I want to throw in, it's 2012 again. Apple. It's like, where did Apple come from? I know it's always been a pretty good stock. Not pretty good. It's been a great stock. But lately it hasn't had the range of the beasts like Tesla or Netflix and hell, sometimes even Facebook. But man, this thing bottomed out at this 155 down here, the 54 area, and it's just been merciless since then. It's just been a force to be reckoned with. Now, when you're looking at this chart right now, take a look at this daily down here. You look at this thing right here, it's a triple top. You got a triple top working on the daily. It closed that 180 after market here. Watch that. If it sticks that 180, this thing is probably going to run. It's probably going to pull a baby Netflix. Maybe not that powerful, but you see what Netflix did when it finally broke its longer term double top there. It took off. I mean, maybe that's what we see at Apple. Watch the thing. Watch it. It wants to go higher. Maybe it doesn't go higher, but it wants to. So we'll see. Quickly, Bison, YY, OLED, and Apple, I think, are all trades that we want to take a look at. If you guys are struggling with your trading, you don't know where to find the stocks, you're having trouble executing, visit thelincolnlist.com. Until the next weekly muttering, take care and trade well.